Robinhood says that they're going to end support for ADA, MATIC, and Sol, the native tokens for Cardano, Polygon, and Solana after they were named in both lawsuits the SEC brought against Binance and Coinbase. So what a way to end the week. We started on Monday with one lawsuit, Tuesday with another lawsuit, and now we have Binance US saying that they are going to be an only crypto exchange. Will, I'm going to toss this off to you first. What does this tell you about what's going on at Binance?
Bad stuff all around, guys. Bad stuff. I mean, it's not just for Binance, right? Like, we can kind of read the regulatory tea leaves there if we want. It just seems like they're trying to distance themselves from any sort of further repercussions from USD or dealing with any sort of brokers, right? So that is what it is. I want to dig into the Robinhood stuff and like the delistings of different pairings. We mentioned that on the hash yesterday about Binance delisting a few different tokens. I think they said at that first time in the blog post they're going to delist about 40 tokens. They've now whittled that down to about 10 tokens, and then there's that USD pairing thing that they're getting rid of as well. Robinhood getting rid of a few tokens. Well, what does this mean? Well, yes, consumers are going to have less options of purchasing different tokens, but for these tokens and these projects, what it really means is that like the liquidity is going to dry up quite a bit, and you should probably expect these token prices to fall because not as many places are going to support them. If it's not Robinhood anymore, which historically has sort of led to a price pump similar to the Coinbase pump for a lot of these tokens, then you're probably going to see the opposite effect, right, where the price of these things go down. And this sort of follows up on a general or like larger picture thing right here, which is that centralized exchange trading volumes are dropping quite a bit. According to new data from CC Data, this May was the lowest month for trading volume since, I believe, March of 2019. It fell 21%, which is low, right? That's the lowest in almost 4 years. This is really because of the regulatory action, and also because on the back end, there's a lot of these brokers, a lot of these custodians are not willing to work with crypto anymore. A lot of these banking partnerships have fallen off, and now we're seeing the effects in both the delistings and the liquidity drying up. Adam, throw it over to you.
Yeah, I think that this is really a good way to cap the week off, because this week really has been sort of the Cold War against crypto and crypto companies going hot pretty aggressively with the U.S. Securities regulator taking these actions. There's a couple of different angles that I think are important here. The first is that the tokens that are being delisted are tokens that have not had any enforcement action brought against them. They're tokens that are effectively collateral damage for the attempts to go after these exchanges. And the kind of the thinking, I forget who it was yesterday, but I saw some good thoughts about this that really kind of struck me, which is that what the SEC is doing here is they're effectively treating these indictments as if it was an insider trading case where you would name the stock that was traded. The difference, though, is that when a stock is insider traded, there's no implication that the stock itself did anything wrong and nobody else thinks less of it as a result of that. Whereas here, because they're essentially making allegations that something was done wrong with these tokens, right, that they are actually unregistered securities is the allegation here inferred, then they're creating a situation where companies that have to then infer, oh, hey, so I should also delist this, which then creates these problems in a way that's really totally inappropriate for the SEC as a securities regulator to do. If they think these tokens are securities, they should bring suits against them. The reality of it is, though, I think the case with Ripple shows that these are suits that are actually really, really hard for them to win when they go up against a well-resourced opponent. And many of the tokens that they named here are well-resourced opponents. So this is actually a backdoor way, it appears, to really kind of damage some of the kind of primary larger tokens that exist out there without actually giving them a chance to defend themselves, which they would very much kind of go for. So I think it's really inappropriate from that side of things. On the Binance side of things, of course, the reason why Binance is shutting down US dollar withdrawals and things like that is because their banking partners are now saying, hey, you might actually be an illegal security exchange. It hasn't been proven yet, but it's not like banks really wait around to kind of figure that stuff out. They manage their risk. And so again, the SEC's action has in effect trapped and will trap many, many people inside of an exchange that they're saying is fraudulent. So again, like the SEC's actions on their face might seem a little plausible, but they are not. Again, like I am so done with giving kind of credence and benefit of the doubt to these regulators who continue to prove over and over again that really they're just out to get crypto any way they can. Jen?
Yeah, just based on all of these tokens that were named in the two lawsuits we're talking about, I wanted to bring up some comments from IOG. They're the Cardano development company. They wrote a blog post this week, and they said there are, quote, numerous factual inaccuracies with the SEC allegations. And they also said under no circumstance is ADA a security under U.S. security laws. It's interesting to see them come out and say this when so many of the tokens or the projects are staying quiet. I'm so curious to see how these projects and ecosystems will start to respond in the coming weeks as more trading platforms maybe delist them, or as more information comes out. It will be interesting, but it was interesting for me to see those really strong comments come out of Cardano this morning. Zach?
Yeah, I think you're spot on, Adam. Like the fact that they haven't gone against issuers and they're going against exchanges and sort of, casting aspersions on these projects by proxy is part of a legal strategy, right? Like what all the SEC has to do when it identifies a big bucket of tokens is have a court establish that at least one of them qualifies as a security. If that's the case, then Binance and Coinbase both become, what is being alleged, right? Unregistered securities exchanges. So the fact that this is part of the legal strategies has these follow-on effects that, Adam, I think you're right, are intended by the SEC. They are desired by the SEC to put a damper on some of these projects that they're not otherwise strategically able to go after on the issuer side, right? So you see these repercussions and these ramifications play out. I want to go to the Robinhood story. I think this is fascinating because in the story, it's mentioned that in testimony, Robinhood tried to get the special purpose broker-dealer license to issue these things. They engaged, I think, in a 16-month process, according to the CEO giving testimony, and they were summarily turned away by the SEC, according to a high Robinhood executive. So I think even Robinhood sort of voicing that frustration that we're familiar with among the true crypto native firms in the space, even Robinhood voicing that seems to suggest that the National Securities Regulator in the U.S. has been pretty obstinate in its ability to tackle some of these really pressing issues as it relates to providing clarity to market participants, right? That's its charge. The SEC is supposed to provide clarity for all market participants, and it hasn't done that by way of enforcement. It really hasn't. This piecemeal approach isn't serving anyone's interests. And now we get to see some interesting sort of follow-on discussions, right, as these various firms manage risk, manage their own likelihood of getting into trouble. So it's fascinating to watch this play out. You do have to wonder if this was intentional, and it does put a chilling effect, I think, across the entire sector in the U.S., certainly for the medium term. Who wants last word on this?
I'll take it really quickly. One thing I think that is interesting about this is the fact that what doesn't kill you does make you stronger. And if a lot of these foundations are able to spin off outside the US and just continue to grow, they are able to decentralize a little bit more than you would think. Some of these companies think US first. They think about the capital in the US and they go after the US market. That might have not been a winning strategy because of the political risk there, and we're seeing that actively play out. But if they're able to set up shop outside the U.S., and there's a whole world outside the U.S., a whole world outside Western Europe, and all those areas, go and build there. Well, in the future, you'd have a much more decentralized team, much more decentralized product, much more decentralized token. It could be beneficial in 5 to 10 years, just frustrating for the moment.